Welcome to the A&T presentation of the new Car Loan Interest Deduction. This presentation is designed to help you as a tax preparer to determine if your clients are actually eligible to take the new 2025 Car Loan Interest Deduction, which is worth up to $10,000 in non-refundable tax credits. So let's begin. What is car loan interest, you might ask? Well, it is the extra money paid to the lender for allowing the purchaser to purchase the vehicle on credit. It is not the price of the vehicle, but it is included in their monthly notes. So the client will need to bring a couple of things to you to claim this deduction, right? So they need to bring what's called the dealer's documents. The dealer's documents will have the VIN number, the weight, the place of origin. Okay. In addition to the dealer's documents, they also need to bring you their annual interest statement or their year-end statement because you need to know exactly how much interest was paid for this new vehicle. And just as an FYI, to get the VIN number, the weight, and the origin, they can also look on the side of their door. There's normally a plate there with the VIN number etched in the color of the vehicle, etc. Or they can bring in, if they're like me, they like to keep the sticker that they actually purchase, showing their car purchase, the amounts of dollar amounts and what goodies were on the car when you first purchased. I call it the window sticker. So before anything happens, we must determine if the customers meet the actual gross income guideline. As a single person, they have to have a AGI of $100,000 or less. If they're a married couple, they have to have an AGI of $200,000 or less. Remember, this is a phase out credit and it is going by income. This the vehicle must be brand new. The taxpayer must be the very first owner. In most cities, cars under 100 miles are considered new, especially in our state. So that's a pretty good gesture. The car's mileage will tell if it's new or not. Leases do not count because they're not actually owned. According to IRS, it must be for personal use only, meaning they're driving to and from school, they're running personal errands, or daily life use, right? So if the person is using it for a DoorDash, Lyft, courier service, or even a company vehicle, the deduction does not apply to them because they will then deduct it on the Schedule C. The vehicle must be backed by a loan, meaning the car must be used as collateral. The lender has also placed a lien on it. And if the lender does not receive payment, they have the right to repossess the vehicle. That's how you know the car is backed by a loan. So they can't use personal signature loans, personal loans, or pay by credit card because that isn't loan secured. IRS has given us specific details on what can and cannot be qualified as a car that is eligible for the new car interest loan deductions. So here you'll see a list of vehicles that qualify: cars, minivans, SUVs, light duty trucks, and motorcycles. The vehicle must weigh under 14,000 pounds. So, again, I've taken the liberty of telling you a few vehicles that may or may not qualify, such as the Toyota RAV, the Honda CRV, the Ford Explorer, the Chevy Tahoe, the Tesla Y. Some trucks that include are the Ford F-150, the Chevy Silverado, my favorite, the 1500, the Ram 1500, or Toyota Tacomas. Remember, this is not inclusive, but this is just some examples, right? So the minivans include Honda Odyssey, Toyota Siennas, Chrysler Pacifica, or Kia Carnival. If you're unsure of the weight of the vehicle, you can always Google VIN decoder and put in the VIN number there. It will give you the make, year, and model. According to IRS regulations, the vehicle must be made in the United States of America. So in the United States, we have plants such as Ford, GM, Honda, Hyundai, Kia, and Mazda. So you cannot use a car that if not the final assembly isn't in the United States, i.e., a kit car. You may get a foreign, or somebody may order a car, transport it overseas, and the final assembly is in Japan, Korea. That does not constitute as an American car. Okay, so let's complete the Schedule A1. Put the names and the social security number of your taxpayer, sorry. Go to page 2. In 22A, you're going to enter the VIN number. In 22.3, you're going to put the amount of interest paid. In 2023, that is just a total of A and B. 24, you enter the small of 10,000 or the interest paid. 25 is your AGI. 26 is their filing status, either the 100,000 or the 200,000 if they're married. Then you just tab down to 30 and enter the total carryover. I would like to take the time to thank you for watching this video. And should you have any additional questions or concerns, please feel free to reach out to me at any of the contact below. And we will see you in the next video.